Why property is so exciting still? Unlike many other investment, if you talk about many other investment, let's say stocks and shares. If you want to buy a $500,000 of stocks, you have to come out the 500. You can always do the margin call, contra a margin call, whereby you put a small sum, you play the shares. The minute the share price drop, your margin is eroded, the fund manager is going to ask, top up your margin. If not, he will let go your shares. You still lose. So in another word, what I'm trying to tell you here is this. The greatest advantage of investing in property here is this. For shares and many others, if you need a 500K, you really need the hard money. Or the risk is high, playing the margin. If you buy a property worth 500K, and you come out 20% of 100K, you can take a 400K loan, and this is what we say using the term of leverage and OPM, other people's money. And that's why it's so exciting. Using other people's money through a concept known as rental. And it makes sense. And I will show you an illustration. Why? Why are there people so hot about the project? Despite cooling measures, 2,000 over units being sold, and people still excited about buying property. Because when you invest in property, you leverage, which I mentioned earlier, a property that is 500, 100, 400, and you use other people's money, which is the rental, to pay for it. And how do you secure yourself? You secure yourself by having to pay an installment over a period of 20 to 25 years at a specific amount. And if you plan an exit and an entry strategy, you will never lose money. How many of you think today, I'm talking about today, right now in Singapore, you can buy a property this weekend with your outlay, you still can get 600% return on your outlay if you buy this weekend in the next 20 to 25 years. How many of you will be excited if I show you where is the property? Put up your hand. Excited? So that you can buy or your client can buy. But do you believe it's possible? Yes or no? Yes. Some say yes, some not so sure. Let me just very quickly illustrate. Here. If you buy a property at Hillview, 900 square feet house, 900 square feet is a 2-bedroom. The size of a 4-bedroom house. As far as a 4-room is 92 square meters, or 4S is 84 square meters. And if you take a price of, let's say, $900, your price is 810K. Follow me so far? Today you can buy a freehold condo at Hillview at $900 per square foot, thereabout. For a 900 square foot size is 810. What the developers sell, as I told you, they name London, Paris, the block name. Yeah? People thinking that they are buying a concept of London and Paris and pay 1,300, 1,250, 99-year leasehold properties. Does it make sense in the long term? I'm not so sure. But if you can illustrate this to your investors and consumers, buying a property, what's so exciting about Hillview? Next 4 years, it will be MRT track. And if you buy this property, let me give you an example. I round it up to 800K. You come out with 20% outlay, say 160K. You say, Mr. Ismail, it's not possible. You must come out 40%. I already told you, Sing Capital is there for you. We will get you the 80% loan. It's possible. Okay? If you do that with an 80% loan of 640K loan, your monthly installment will be, if you take a 2%, $2,714. If you take at 1%, your installment will be $2,412. These are exact amount. You have a choice. If you are conservative in nature, you can go for a 3-year fix at 2%. But in fact, you can get 3-year fix less than 2%. First year 1.2, 1.6, third year is 2.2 and so on. So this is available. My next question here is this property that I highlighted to you. How much can you rent out? What will be your rental income? If you visualize like a video clip, it's a 2-bedroom, decent living, the Petals at the Hillview, freehold, 12 years, swimming pool, tennis court, supermarket, laundromat, security, beautiful. Let me tell you, my friends, at its rock bottom, your rental, 2005, high probability, 2008. Because a 4-room at Choa Chu Kang is 2004 already. A 3-room is 2001, 2002 already. How can with all the facilities cannot be this? So if you can rent out at this amount versus your monthly installment of this amount, basically this amount 2004 to 2007, 2005 to 2008 uses what the concept we talk about, other people's money to pay the rent and the monthly installment. At the end of 25 years, my friend, when the entire loan of 640K is fully paid up, what do you think is the fair price of this property, which is freehold, MRT in 5 years, walking distance, Hillview, potential en bloc, and you bought it at 800, which is $900 per square foot. Taking inflation at 3% times 25 years is 75%. If you compound it, is 120%. If you compound just inflation at 3%. Do you think it's logical for this property to be 1.6 million? And let me tell you, it will be. You know why? Your break even is 1.2. Why 1.2? You bought at 800, your interest is about 400, 300 plus your stamp duty, legal cost. Your break even is 1.2. So 1.6 is a high probability deal that you could do. Then my next question again to you here is this. If this property that we are talking about, you bought it at 800K, you came out 160K, 25 years later, when you sell, the check that you are going to get is for 1.6 million. What is your return, my friend? What is your return? Close to 1,000%. So, why property is not exciting? We are in the right job and the right trade. It is just that people are not confident because market sentiment change. So if we can advise them to buy the right property at entry level, capital appreciation is a byproduct of rental yield. You must remember that. Only when rental can go up, capital can go up. If the rental is muted, how can capital go up? What is the justification? You see, why I'm trying to tell you and teach you that little bit here, my friend, here is this. You are going to walk out of this room today. You are going to further equip with more knowledge. Other than this, you are going to attend more seminars. You do the right thing. Okay, so basically what I'm trying to tell you here is this. Right property in the long term, if you buy in Singapore, the fundamentals, 1,000% other people's money. So what am I trying to say? Let all of us, ourselves, look at it. Are we doing the right thing?